In times of global economic uncertainty, the search for assets that protect wealth becomes more crucial than ever. But can Bitcoin really be considered a reliable store of value like gold? Many traditional investors still see Bitcoin as risky or speculative, but is this view outdated in light of historical data and future projections? In this video, we will critically analyze the role of Bitcoin in the global financial landscape, comparing it to gold and other asset classes. If you're looking for clarity on how Bitcoin can act as a hedge against inflation and want to make informed decisions to preserve your wealth, this content is for you. Stay until the end to understand why ignoring Bitcoin's potential could be an even greater risk. Many traditional investors, especially those aged 40 to 60, still view Bitcoin with skepticism. They associate it with volatility and speculation, without fully understanding its potential as a store of value. However, throughout history, gold has always been the preferred safe haven during economic crises. It is tangible, scarce, and widely accepted as a form of wealth preservation. Yet gold also has significant limitations. Storing it physically can be expensive and insecure, and its liquidity is inferior to digital assets. On the other hand, Bitcoin emerges as a digital alternative with unique characteristics that make it attractive. But is gold still the only viable option in an increasingly digitalized world? To better understand this discussion, let's compare the main characteristics of Bitcoin and gold. Gold has a millennia-long history as a store of value, being widely accepted and used as protection against economic crises. Its tangibility and natural scarcity are strong points. However, it faces modern challenges: high storage costs, complicated transportation, and low portability. Additionally, its performance during recent crises such as the 2020 pandemic showed that it may not be as efficient as once thought. Bitcoin, on the other hand, offers significant advantages. It is programmed to be scarce, with a maximum limit of 21 million units. Moreover, its digital nature allows for fast and secure global transfers, eliminating intermediaries and reducing costs. Bitcoin's decentralization also makes it resistant to censorship, a valuable attribute in unstable economies. But can Bitcoin partially replace gold in the medium term, or is there still room for both to coexist? Beyond gold, it's important to compare Bitcoin with other traditional asset classes, such as real estate, government bonds, and commodities. Real estate, for example, is seen as a solid store of value, but presents serious limitations. It is illiquid, difficult to trade quickly, and subject to local crises such as real estate bubbles. Government bonds, on the other hand, lose real value in scenarios of high inflation or negative interest rates, as we've seen in some economies in recent years. Commodities, while useful as a hedge against inflation, are highly volatile and depend on specific markets. In this context, Bitcoin stands out as a global and accessible alternative. It offers protection against weak fiat currencies, instant liquidity, and growth potential superior to already mature assets. To illustrate this, consider a comparative simulation of returns between Bitcoin, gold, and government bonds over 5 years. While gold and bonds showed modest gains, Bitcoin recorded exponential growth even considering its volatility. However, when discussing Bitcoin's future, it's essential to consider both its projections and risks. Projections indicate that institutional adoption of Bitcoin as a store of value will continue to grow, especially as large companies and governments begin to explore its utility. Regulation will also play a key role, bringing greater security and legitimacy to the market. However, risks remain. Short-term volatility is still a concern for many conservative investors. Additionally, dependence on technological infrastructure and possible shifts in market perception could impact its performance. Despite this, ignoring Bitcoin's potential can be as risky as underestimating it. It represents a unique opportunity for diversification and wealth protection in an increasingly digitalized world. Now let's explore the perspective of central banks and financial institutions on Bitcoin. In recent years, we've seen growing attention from monetary authorities to the rise of cryptocurrencies. Some central banks are developing their own digital currencies, known as CBDCs, central bank digital currencies, as a response to Bitcoin's advance. While these initiatives demonstrate recognition of the importance of financial digitization, they also raise questions about Bitcoin's future. At the same time, major financial institutions, such as Tesla, MicroStrategy, and pension funds are adding Bitcoin to their portfolios, validating its role as a store of value. But does this make Bitcoin safer for individual investors? The answer depends on how you assess the risks and benefits associated with the asset. Another crucial point is Bitcoin's role in portfolio diversification. In times of economic uncertainty, diversifying your portfolio is essential to mitigate risks and maximize returns. Bitcoin has proven to be a powerful tool in this regard, especially when combined with traditional assets like stocks, bonds, and gold. Case studies show that portfolios including a small allocation of Bitcoin tend to outperform those that ignore the asset. For example, an allocation of 5% to 10% in Bitcoin can significantly increase total returns, even considering its volatility. For conservative investors, we recommend adopting strategies like dollar cost averaging, DCA, which involves investing small amounts regularly to reduce the impact of volatility. This approach allows you to take advantage of Bitcoin's growth potential without exposing yourself excessively to short-term risks. Unfortunately, many myths about Bitcoin persist, making it harder to fully understand. One of the most common myths is that Bitcoin has no intrinsic value. In reality, its value derives from its programmed scarcity, cryptographic security, and decentralized network, which ensure its resistance to manipulation and censorship. Another myth is that Bitcoin is just speculation. While it's true that the cryptocurrency market is volatile, it also offers protection against weak fiat currencies and expansionary monetary policies. Real-world examples demonstrate that Bitcoin has proven resilient during global economic crises, such as during the 2020 pandemic, when its price soared while other asset classes struggled. Understanding Bitcoin goes beyond preconceptions. It's about seeing the potential of a new financial era. But how do you invest in Bitcoin safely and responsibly? The first step is to choose a reliable exchange that offers robust security and ease of use. Research regulated platforms and evaluate their reputation before making any transactions. After purchasing Bitcoin, it's recommended to transfer it to a cold wallet, which stores the asset offline, protecting it from hackers and fraud. Additionally, consider market entry strategies like dollar cost averaging, DCA, which involves investing small amounts regularly to reduce the impact of volatility. Also, be wary of scams and frauds in the cryptocurrency ecosystem, such as Ponzi schemes or promises of unrealistic returns. With the right precautions, you'll be ready to take your first step into the world of Bitcoin. Summarizing the points discussed, it's clear that Bitcoin offers unique characteristics as a store of value, especially in an increasingly digitalized scenario. Compared to gold and other asset classes, it presents significant advantages, such as portability, liquidity, and growth potential. However, like any investment, it also carries risks that need to be carefully evaluated. With this knowledge, you'll have clarity on Bitcoin's role in the global financial landscape and can make informed decisions to protect your wealth. Ignoring Bitcoin's potential can be as risky as underestimating it. Be prepared for the future of finance. If this video brought clarity to Bitcoin's role, leave a like and share it with other investors who are looking for alternatives to preserve their wealth. Subscribe to the channel for more content on finance and strategic investments. Remember, the future of stores of value is constantly evolving. Be prepared to adapt your strategy and seize the opportunities that arise. See you in the next video.